Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Cord Blood America Incorporated, traded under the symbol CBAI. Members of TimelessWealth.net have requested an update to this chart following our publication coming off of this trading session right here. Every bar and or candle on this chart represents one session worth of price action, hence the daily chart. Let me start off by addressing these trend lines indicated in front of you. I've left the chart looking identical to the last time I annotated, again coming off of this trading session right here. I talked about a key resisting mark at 0197 or 1 hundredths of a cent slash 2 cents per share, which is the top Bollinger Band at this point in time. The reason I talked about this market being so key was first the fact that this was the high coming off this trading session, and more importantly the 52-week high, a new 52-week high coming off this trading session right here. And the 2 cent mark was not too far off, serving as psychological resistance. That is, remember our 1 penny mark that I talked about as being a key breakout level? Well, the 2 penny mark happens to be a potential 100% return on investment from this key breakout level, so this would be a key resistance level to watch for the price breaking past in the event that the price does appreciate. The other reason 2 cents per share was considered resistance was if you had analyzed my prior videos. Actually, if you just watched my prior videos, I analyzed the weekly chart, the weekly perspective concerning the price action of CBAI, and we looked at resistance dating back to 2008-2007, where 2 cents per share was a key breakout level. If you are interested in viewing those prior videos, by all means log on to TimelessWealth.net and look them up under the section entitled Publications. In any event, coming off of this trading session and where we made a new 52-week high at 0.197 or 1 hundredths of a cent, the price declined, and it was natural to do so just based on the fact the market was overextended or overbought. We can see that purely based on the RSI, not to mention the candles themselves. And if you remember my video well, I mentioned that a very key supporting level would be the 1 3/10 of a cent mark. I specifically went back to my prior video and checked to make sure that was the case, and what do you know, the low coming off of this hammer candle right here was 1 3/10 of a cent. So had you entered at support, and if I were playing this based on the technicals I had outlined, I'd put a bid in just above that supporting level. Chances are you would have got filled and now been sitting on some nice gains, seeing how coming off Friday's trading session the price peaked at 1 64 hundredths of a cent. So this is a good lesson on how technicals can be applied to just about any market that's liquid. That's another thing I want to mention, the fact that we've seen good volume. That's good to see on this in these past 3 trading sessions, which seem to imply a reversal in trend, that is coming off of this retracement period right here. The only thing I'd like to see is greater volume. If that does happen, I think that'll satisfy the conditions for traders to appreciate the price in the market once more, such as this period right here and this one right here. And more importantly, again, look at how much the price has declined relative to how much it has rallied. We've seen a decline over here, and over here, and the overall picture is quite bullish. We'll take the low here and just extend a trend line like this. So you can see the overall picture, long-term perspective, is an uptrend, and that's ideally what you'd like to see. So let's just get these trend lines updated and look at where we stand at this point in time. First off, coming off this trading session right here, you can see that we broke below this supporting level at 0.173 or 1 73 hundredths of a cent. So as supporting levels are broken below, they become resisting ones, and this level coincidentally remains support. The price broke below it but did not close below it. So in other words, intraday we saw a dip to the supporting level at 1 3/10 of a cent, which also corresponds with the middle Bollinger Band at this point in time, and or the 20-day simple moving average. However, the price pulled back, the bulls pushed the price back up and closed above this very key trending moving average, the 10-day simple moving average, this blue line right here. So that's the first thing I'd like you to keep in mind, look for the price to break above it, and more importantly to hold above it. You can see that ever since the price broke above it back here, this trend line has supported the price quite well. That is until this trading session right here. So what we'd like to see is greater strength in the market, greater volume coming in, and the bulls pushing back above this trending 10-day simple moving average. As for resistance, there is actually one level that I missed that I talked about last time, and that was this level right here at 1.65 of a cent. So more or less the high coming off Friday's trading session. That served as minor resistance, followed by 1.73 of a cent, followed by 2 cents per share, or 1.97 of a cent, which I consider to be more or less the same. So those are the events to look forward to in the event the market does appreciate. If we see a pullback in price, then what we'd like to see is below average volume and some of these key supporting levels to hold. For instance, the 1.5 of a cent mark, or 1.5 cents per share, as well as 1.3 of a cent. If not to worry, we have this supporting level right here, which serves as minor support at 1.15 of a cent, as well as a key breakout line. So in the event the market breaks below this point right here, that'd be a sell signal for me. That means there's something wrong in the market, perhaps bearish activity. But in any event, we're well above this mark right here. In fact, there's quite a number of supporting levels beneath 1.5 of a cent. So in any event, look for the price to test these resisting levels and hopefully break back above the 10-day simple moving average and eventually test a new high, perhaps a new 52-week high. Once again, this was Edward Stevenson from TimelessWealth.net. I encourage you to visit my site, TimelessWealth.net, and tune into some of the materials I've recently added, including all sorts of publications, articles, educational materials, and join my free newsletter for overlooked trading and undervalued investment ideas. I know that some members have been emailing me, telling me they've been having quite a bit of success with our past trading and investing ideas, so that's definitely something you want to try. And best part is it's all free, so definitely worth a look. Again, that's TimelessWealth.net. Thank you for listening.